Welcome everyone to SilverSeek Live. We're happy to introduce our next event. Today we have two special guests. We have the CEO of Crest Mines, Scott Dreier, and the editor of the Morgan Report, David Morgan. Today I'd like to kick off with a presentation from Scott Dreier, CEO and Chairman of the Board of Crest Mines. Scott Dreier has 45 years of geological expertise. He has been involved with several companies, including Placer Dome, Black Dome Mining, and Gold Source Mines. As an investor in Crest Mines, I can say that I've watched this company develop from an exploration play into a producer in northern Mexico. I have visited the project, and I will be happy to share that report to you through the webinar here in a short bit. But to kick it off at this point, I'd like to hand it over to Scott Dreier, and at this time he will be presenting Crest Mines. Scott?
Thanks very much, Peter. Welcome, ladies and gentlemen, to GoldSeek's webinar, and I'm pleased to be able to make a presentation to you on the various aspects of Crest Mines. On the first slide, you can see our Santa Elena operation in panoramic view, and in the upper right-hand corner of that slide, you can see some of the attractive corporate attributes of Crest Mines. We have successful people, we have successful operations, we have a growing reserve base where production is growing as well, as is our cash flow. We are profitable even at these metal prices. We're debt-free, and we have very low-cost production. You'll note that in the bottom right-hand corner there's a slide number, and I'll refer to those periodically to keep us synchronized. I will be making forward-looking statements, and the disclaimer is simply a cautionary note not to rely on those types of statements. In terms of successful people, I'm on slide 3 now. We have an experienced, successful management team. You can read in detail on our website excuse me, some of the successful involvements that all of these people have had. I think the most important, or probably the greatest tribute to this particular group, is the success that they've had at Santa Elena. The project was taken on in 2005 as a fairly raw grassroots exploration type of thing. We took it through exploration, pre-fees, financing, construction, and operations, successful operations, in about 4.5 years. So I think that gives you a good sense of the capabilities of the people involved. We have a good, strong, independent board of directors that keep us all on track with respect to compliance and our general business approach. On slide 4, it gives you an overview of SilverCrest, part financial, part technical. The first 9 months of this year, we produced 1.8 million silver equivalent ounces. Our market guidance for this year is 2.4, and we're on track to do that or better by the end of the year. In terms of gold, or a split on that equivalent ounces, we're at about 30,000 ounces of gold and 725,000 ounces of silver, I believe it is. Our cash cost for the first 9 months was $782, and our all-in cash cost, which includes our administrative and another set of components, is at about $13, $13.15. So as I said, we're still showing good margins on both gold and silver at current metal prices. Our revenues were just over $42 million for the 9 months, and our net earnings were $12.8 million, which gave us earnings margin of about 30%. And you can see there what our estimated production for 2013 is 2.4 million silver equivalent ounces, and we're in the midst of an expansion plan that I'll tell you more about, but should take our next year in 2014 take our production to about 3.5 million silver equivalent ounces. In terms of reserves, we currently have 19.7 million ounces of silver and 327,000 ounces in reserve at Santa Elena. There are additional resources there, and the combination of in the reserves are the remaining open pit reserves, the underground reserve that we have recently developed, as well as the heap leach that is, or heaps that are retreatable to recover a significant value. On the next slide, sorry, on number 5, some capital structure and trading history. 108 million outstanding, 115 fully diluted. The retail investors hold about 60% of the issued and outstanding. Management still controls about 8%, and institutions account for about 33%. So it's a pretty good distribution of shareholdings. The management holdings, of course, give us incentive to make sure things that go according to oil, and that everybody makes some money. We are listed on 2 exchanges at the moment. We're on the TSX Venture as well as the NYSE Market. Our daily volumes, or our 90-day averages rather, are in the range of 500,000 a day. Things are a little slow right now, but we have traded as much as 1.2 million, 1.5 million on the combination both exchanges. Our 52-week low high is $1.19, and the high is $2.79. We're currently in the 160 range. And the graph at the bottom right-hand corner gives you how our stock trades or tracks the silver price, and it seems to correlate fairly well. Slide 6 gives you a sense of our reserve and resource growth from the time we were incorporated, or in 2006. It has grown fairly consistently each year, and the culmination of reserves and resources in 2013 are shown on the right-hand side of that chart. The reserve gives us about 8-year mine life at Santa Elena, with lots of room for expansion of those reserves and resources. Slide 7 gives you a general location of our properties. The Santa Elena is right in the middle of that particular map. It's about 4 hours south of Tucson and about 2 hours northeast of Hermosillo. The other property I'll bring to your attention right at the moment while we're on this map is the La Jolla. It's in Durango State, just north of Mexico City, and Santa Elena, of course, is in, or not, I'm sorry, not in, La Jolla is in Durango State, north of Mexico City. Santa Elena is just south of Tucson in Sonora State. The point about this is that we focus fairly clearly on access and infrastructure. The Santa Elena is a perfect example of that approach. We're about 7 kilometers off a paved road, and as I mentioned, within stone's throw of 2 major centers that supply virtually all our mining needs. On page 8, again, it's the overview of the Santa Elena mine with the current pit on the right-hand side. The heap leach operation is on the left-hand side. The pile in the middle is the heaps being treated, and the recovery ponds on the left center. And in the background are the waste dumps. It's interesting to know that the heap leach portion of this was brought on stream for less than $20 million. We have cash flowed over $70 million from that operation to this point. And in the heaps themselves, there's an excess of $100 million that we can recover through the new 3,000 ton a day mill that is under construction. And you can see that construction in the foreground. This is a little more detailed look at the pit at itself. We're nearing the bottom of that. We'll be finished the pit in probably August, October, or September of next year. But you can see the main zone that we've been mining. We are discovering additional zones such as the Tortuga and the El Chalugo Dos, which are cross-cutting veins that appear to have significant size to them at this point. The Tortuga in particular, we've encountered 17 meters of 2.5 grams, 115 grams of silver in one hole, and in a second hole we encountered 2.6 meters of 24 grams of gold and 900 grams of silver. So there's significant potential to add to those resources, and the bottom of the pit is quite high grade. Our cost should be maintainable at around that $8 level as we're doing this open pit. As we go deeper, the grades get a little higher, and of course the strip ratio drops as we narrow the pit down. This slide 10 is a longitudinal section of the main zone. You can see the open pit in the upper left-hand corner. The mauve or purple is the reserve that we have defined to date. It's NI 43-101 compliant, and that was done earlier this year. You can see in the gray areas around where the resource occurs, and we will be working from underground to bring those into a reserve category as we progress with the mining. The ramp is down to about mid-level there. We're down below the bottom of the open pit, and we've accessed the main zone in a couple of areas and are in a position to develop stopes that will begin to feed the mill as soon as it's available. There are a number of hot spots in terms of grades in the Tortuga and in the El Chalugo zones, but also in the main zone there's about 3 areas where grades get quite high and quite significant. The deposit is not cut off to depth. We have lots of room there on the depth portion, and to the right lower corner it is still wide open there, and we're still seeing good grades and good widths, anywhere from 5 to 25 meters throughout this deposit, which will allow us to keep our mining costs to a minimum by using long hole stoping on a good portion. Probably 65 to 70% of the deposit as we know it can be done by long hole stoping, which is relatively cheap. I'm sorry, I thought there was a slide in here on the construction of the 3,000 ton a day mill. It is well underway. We expect to turn that system on in January of next year. That will be fed by an optimum combination of open pit material, underground material, and rerunning of the heaps. And as I said before, those 3 things at this moment give us about an 8-year mine life, and we fully expect that to increase somewhat as we go on. The deposit that has caught a lot of attention is the La Joya project in Durango State. You can see in the inset on the left-hand side that we are the top red circle. That is the La Joya project. It's in a good logistical area. It's about an hour or so south of Durango. We're just across the valley from First Majestic's La Parrilla, and the 2 mines in the bottom circle are mines that have been there for a number of years, the San Martin, and I'm going to draw a mental blank here, but they've been in operations for one can say centuries. So it's a great geological area. We've had 2 drill rounds on it. It's we now have a resource stated of just under 200 million ounces of silver equivalent. It's a skarn deposit that has flat-lying mantos intersected by vertical or subvertical shear zones, feeder zones that have mineralized this with copper, gold, silver, molybdenum, and tungsten. So it's an interesting operation to be working on. We did a preliminary economic assessment very recently. And this project, given the resource and the fact that we haven't cut that resource off yet, could sustain a substantial project, but we elected to take a look at something that was a little more contained in the form of a starter pit, and we developed an economic assessment for about an 8-year mine life, less than a 3-to-1 strip, and took a look at what the economics determined there. Principally to keep the capex expenditures in an area or a range that we could manage with SilverCrest. It turned out that the pre-tax net present value was $133 million, and the internal rate of return was at about 30%, which are good numbers given the stage of the project. I think the important part of it is that could be done with a $141 million capex, which, if you look down the road, this is probably 3 years down the road to get things developed and on stream. Santa Elena should be kicking off probably $60 to $80 million in cash flow. So given that cash flow, we should be able to arrange some sort of debt facility that would help us keep our equity down. The other aspect to it is it does have a high component of copper content. It produces an extremely attractive copper concentrate with the gold and silver reporting to that concentrate. I think it's 35% copper, 30 to 35% copper, which should demand a premium product in there. So we think we can probably do some sort of offtake contract on the copper itself, and the deposit contains about 75 million pounds of tungsten, which we think also could provide us with an attractive offtake agreement to help finance this particular operation. Down on the bottom of the table, you can see the sensitivities with respect to, or the intervals of silver and copper prices and gold prices that we use to develop that table. So you can see it's fairly sensitive in both directions. Slide 13 just gives you an overall sense of the La Jolla location and project. It's in an excellent trend. We have about 10,000 hectares, I think, at this point under option or own 100%, and we'll be looking at other targets in that particular area. Institutional holdings, there's a good slate of institutions involved with us, and you can see their names there on the left side of slide 14. We are covered now by 8 or 9 analysts, and you can see their names, and I encourage you to go and look at their assessments and reports on SilverCrest. The investment highlights, you can see some of the construction going on here. We're much further advanced than that. All the superstructure is up, the concrete is done. The ball mill, which is the last major component to arrive, is supposed to be here in the next week or so, and we're pushing very hard to get the piping and wiring done so that we can turn this thing on in January. In terms of SilverCrest highlights, we're trying to build the next mid-tier silver producer, and you can see by the attributes that I outlined earlier that we're well equipped to do that. We're unhedged, high-grade, low-cost producer. We have excellent profit margins and a strong balance sheet. I think our working capital at the end of the quarter was about $30 million. We have no debt, and we have a $40 million line of credit with Scotiabank that we have yet to draw down on. Our production will be increasing dramatically next year, probably 45 to 50% growth, and we have excellent organic growth opportunities for expanded resources and reserves. In terms of catalysts, we have our usual quarterly production and financial statements. We'll give expansion or updates on the expansion plan and look forward to turning that mill on. I think that's all I have to say, Peter. I'll turn it back over to you.
Okay. Great. Well, thank you for the overview, Scott. We have a couple questions wanted to ask you. We had a question come in from Ken regarding your earnings per share. What is that looking like, your PE ratio, and what SilverCrest, how does the company operating in the current lower silver price environment, are you still managing to make a profit?
Well, let me answer the last one first. Our cash costs, I think, at the end of the quarter was $7.49, I believe it was, and even our all-up numbers were $13.50, I think, on a silver equivalent basis. So yes, we're at $20 silver. We've got $7 to $10 on profit margin. So we're doing very well, and you can see that from our earnings statement, which are now filed for the quarter. We had $40 million in revenues, and for the 9 months, and we had earnings of $12.3 million. So are we making money? Yes, we are. I don't have the PE in my head, but if you have $12 million as earnings and $1.60, you can do the math.
Great. Okay. Well, thank you for that. And the next question is kind of similar to that. This one comes from Chris here. He's asking, actually, sorry, this is from Ben. Ben's wondering about what happened to silver miners in 2004 when silver was $5 an ounce. Some silver miners were making a profit. At this point, a lot of the companies are not making money around $20 an ounce silver. SilverCrest, as you just mentioned, is producing at a cash cost substantially lower. But do you have any insights that you could share to why a lot of these producers are producing at such a high rate right now?
Well, I think it's kind of hard to generalize because each of these guys has their own specific set of circumstances. But costs have been rising continually over that period. We haven't seen $5 silver since about 2004, I guess. So you've got 10 years there of incremental inflationary types of costs. Labor has gone up, diesel has gone up, all of the chemicals or cyanide that a lot of people use, all of those costs have gone up fairly dramatically. So certainly that contributes to it.
So is that kind of a representation of the inflation itself and the actual production cost going up? That's inflation itself showing itself?
Well, I think certainly in part it is, yeah. The other part goes obviously to the nature of the ore deposit. Are you underground? Are you mining narrow veins? Because those tend to be amplified. Those kinds of conditions will amplify your costs as you move forward. So it's
okay.
Okay.
Okay, and I don't know if you're able to answer this next question, and this might be more something to refer to the analysts covering SilverCrest, but we've got a question from Chris is asking, once the precious bulls market resumes and we see silver hitting new highs, do you have some thoughts on where SilverCrest share price may be trading? So again, that might not be an appropriate question for you to answer, but
yeah, that's difficult for me to speculate on that. I would sooner the analyst did it, but I am pleased to hear that it's not if the price is increased, but when.
Okay, well, is there anything else that you'd like to add about SilverCrest? If investors or readers or participants want to learn more about the company, they can visit your website at silvercrestmines.com. If they have any other questions, can they can contact you at the company there, Scott?
Yes, absolutely. If they have questions, they can contact Michael Rapsch or anybody in the management group. We're generally open to responses to questions, and we try to make time to deal with investor concerns. So all of those ways can be ways to learn more about SilverCrest.
Great. Well, as I mentioned at this intro there, I did visit your operations last year with Simon Russell. We wrote a report on our site visit. I just sent that link into the chat window if you're interested in looking into that. And we look forward to doing a follow-up site visit here sometime, hopefully early part of next year. I've been an investor in SilverCrest for several years, and it's been a pleasure to see a successful company go from discovery into production, and now with your underground coming close to production and La Jolla developing, it's been very good as an investor to see the company develop as it has. So Scott, thank you very much for your time today, and we look forward to having you back in the near future.
Okay, Peter, thanks very much.
All right, thank you. All right, now we'll move on, and I'd like to invite David Morgan. He will be our next presenter. David Morgan has been a silver investor for quite a long time, since the age of 11. David Morgan is the editor of the Silver Investor and the Morgan Report. I've been following David Morgan for at least 10 years, if not more, in closer to 15 years. Actually, when I started first buying my first ounces of the silver, I started following David. Since then, since silver's gone from $4 or $5 an ounce up to $50, now $20 an ounce, it'll be a great time to get an update on what's happening in the silver markets and get some of David's perspectives. So at this time, I'd like to introduce David Morgan.
Thank you, Peter. Before I forget, I am a owner of SilverCrest, and it's been on the Morgan Report list for quite some time. Peter, I need to get the control of the desktop. How do I do that?
Yes, I'll go ahead and do that right now. Not sure if that's come through.
Okay, you should be seeing our alert
Yes.
system. If that's showing up on your screen.
Yes, it is.
Okay, good. All right, well, welcome everyone. It sounds like we got pretty good attendance on this, and of course it'll be recorded and it'll be put up on the web somewhere, probably multiple places. One of the biggest questions that I've received could kind of be summed up in, what is the Morgan Report? How do you operate? And lots of questions actually revolve about what we do. So I thought I would take some of the time that I'm allotted here to explain for those that are not subscribers the difference between the Morgan Report and the Morgan Report. And I say that deliberately. The reason I say that is a lot of the conferences that I do, I get a lot of people, investors, fund managers, whomever, that come up and say, I like what you're doing, and I read the Morgan Report. But what they're really saying is that they're on a free list, and that's fine. But the Morgan Report is the paid list. So there's really two reports. They are actually called different things, but in the vernacular, a lot of people refer to either mailing list as the Morgan Report. So when you are a member of the Morgan Report, there's three levels of service. There's a basic level, which is basically your buy and hold individual investor that wants to get the monthly report and our updates, and that's all they get. Actually, they get a lot more than that, but I mean that's the basic service that they get. They get a bunch of bonuses that I'll go into in a moment. But the next level of service is called the Basic Plus, and that you get the Morgan Report and this alert system that is on the screen right now. Hopefully everyone's seen this. Now, this is the only one in the industry that I'm aware of. Not Doug Casey, Coffin Brothers, Porter Stansberry. I mean, some of these really big names that are really huge marketing companies that know how to market much better than I do not have this. Now, this is not your basic service. This is a step up. And the Morgan Report alert system is for a couple of reasons. One, if you're serious about this market like we are, this pops up on your screen. Now, you have to install this. And once it's on here, it means that something's changed. Maybe we sold a stock, maybe we bought a stock, maybe something's going on in the market, maybe we're getting pounded, maybe we're going up limit. I don't know, but that's what the purpose of this is. And when you get this, it'll stay on top of everything else that's on your desktop. Now, obviously, we're free market. There's probably, very few that are as free market as I am. Some people don't want to install this and bought the service. In other words, they have the Basic Plus service and say, you know what, I really don't want to be bothered. I mean, I know it's random, I know when it comes up, but, I don't want it. So that's fine. But it is something that circumvents the email system, which is becoming more and more difficult all the time. And that's another thing that we thought ahead of at the Morgan Report that many others have, although some have. So this is saying that there's something going on. I see it, so I don't have time to read it. At least I know something's out there, so I can click the hyperlink system. So now what I'm going to do is get into the website, and I'm going to click on the members only. And so now everyone, let's see. So, I don't want to order report, or maybe I can try this again. It'll work. Peter, can you see the screen?
Yes, the screen's showing up. There we go.
Weirdness. What happens when I don't really want to order the service. Well, folks, I'm not having much luck on my own website. That's rather embarrassing. So let me, I just unplanned. Well, I will, darn, this is really bad. My webmaster. Here's why it's not going to be long. Let me try it one more time. And if not, I'm pretty light on my feet. I will move onward, and we can move into questions. I'm sure I've probably got more. And, well, let me just go through a couple things on the front page here. So this is for free. First of all, if you're new or not, you can, first thing you should do if you want to check out everything free is come here and scroll down on this pull-down menu to join the free email list. Okay? Now, all we ask here is an email and a first name, and then you hit go. And it's a double opt-in like everybody's required to do. And what you'll get is our autoresponder, which comes off another server, and that will give you the 10 rules of silver investing and a lot of other stuff. But it also, on the first email only, allows you to subscribe to the Basic Plus service, the one I just told you about that has the alert service, for free for 30 days. So not only are you getting our free email updates, which are once a week on the weekend, but you also have access to everything if you want to. And, again, that's your choice. But it's hard to describe everything, and obviously I want to log into the site and goes around in there, but looks like I'm not having any luck. So back to the site menu. Here's something, especially if you're new, is the archives, okay? And the archives have everything that I've written from like year 2000 to, I don't know, a few years back. About 2010 or 11, I decided to quit writing in the public domain and focus my efforts on the written word into the members-only section, but to do videos. So we've done a lot of audio, a lot of video, and that's available for free as well, and that's at the YouTube channel, and the YouTube channel is Silver Guru. So, Peter, you might type that into the chat, you might not. But that's one way to follow everything that we do. Just go to YouTube and subscribe to our YouTube channel. You come into this area of the archive. Obviously, some of the stuff is dated. I mean, solar cells and energy crisis, stuff I wrote about on solar, and it's still pertinent. Obviously, the solar industry has gone up, and we wrote that article in 2001. So let me get back to where I was. There's lots in here you can look at. Charles Savoy is interesting. Charlie has done copious amount of work, and he stands alone. No one can stand in his shoes on the amount of work that he has done into what I'll call truth, really not conspiracy, about how badly silver's been suppressed through the ages. It's not just the current goings-on, but it's gone on for a very long time. If you look into it heavily, as Charlie has, you will see that the Anglo-American Empire, which is how I refer to it, which is the London banking consortium tied to the U.S. banks, the London-New York fix, if you want to call it that, has done to the silver market for a very long time. Gold certainly has a history of government interference. Silver does as well. In fact, silver is the one who's taken out of the monetary system, and if you read the Wizard of Oz and understand it's a metaphor for doing the gold-only standard, Dorothy was wearing silver slippers. It was basically about the people's money versus the bankers' money. When you have a gold standard only, you have a much tighter control, and it's an easy step from the gold-only standard to the fiat standard. You have a bimetallic standard or trimetallic standard. That's difficult. So I don't want to take too much time. I could go on and on, but let me go back here and see if I can log on to my own website. And okay, there we are. So this just gives you some idea of what we have, and I'm not going to take a lot of time, so I know there's a lot of questions. But if you want the current report, it's right there. You click it, and it should load here fairly quickly. Now, these are usually pretty long because it's electronic format only. We don't do hard copy ourselves, although I have a license agreement. So here you go. Every month you get this kind of stuff. Go into the to our picks, and you look at like the top tier. I'm just going to show you the top tier. Made top tier for this month. Previously made top tier for sold. What I did way back in the beginning was I divided the portfolio into top tier, mid-tier, and speculation. Speculations mean speculation. It means money you can afford to lose. And if you go back to how to use the Morgan report and read it, I give an example. If you have $1 million that you're going to invest in this market, you would only be allowed to put $1,000 into 10 speculations, and you should put the same amount of money in all 10. So if you're a millionaire and you lose $1,000, I don't think you're going to be too upset with it. But people, time and time again, want to know what my favorite speculation is. There's no way to know that. There's too many variables. There's too many unknowns. I've been in this business a long, long time. And almost everything I've learned the hard way. I'm sorry, but I had to go through the school of hard knocks. I'm pretty bright, but not bright enough to not make mistakes. So anyway, coming back to the top tier, fund managers love this because what I do is I take what parameters I have, and I'm not telling anybody what they are, although most people can guess some of them. And I find out of the group which ones are performing the best, and those get highlighted every month. So, for example, if you had Silver Standard, we exited Silver Standard off this list a long time ago, back when it was $20. Now it's approaching, I don't know, 8 or 9. I don't get out Standard that much anymore. But even back when we bought it, you can see you're still on profit. But anyway, the point being that we do serious work. We look at this. This is something that you rotate in and out of. In other words, when Yamana was in the green, you might be buying that and exiting one of the other positions. It's a good way to keep control, and this is where you're going to have bigger gains, more steady gains, more safe gains than you would in the speculation section or the mid-tier section. So that's a quick look at that part. Let's see if I can get back. I don't really know how to get back to where I want to be. All right. So another thing that we do that I don't think anyone else does is, like, when we go on a mining tour, this is David Smith who works for us. We take these videos. I mean, who else in the industry? Peter, do you know anyone else in the industry that does this, that when we go on a mining tour, we actually
No.
film it?
No, I do not.
No, I mean, no one.
No.
I mean, the amount of money we ask for what we give, I think is just crazy. I mean, so there's David talking to a CEO of Impact. He also has a position in Energold. Energold is in our list. I've known Fred for years, one of the best guys, I think, in the business. But this is, something that you get. This is the basic plus service. I mean, we have to pay for our own service. It's not like, this stuff magically happens. We have to work for this stuff. But, this is something that unless you've actually paid us money, you don't have any clue, or you might, but, you think it's maybe a monthly report. Well, that's if you're just on the basic service, which is $129 a year, which, it's rather pathetically small relative to what we think we're giving. But nonetheless, it's been tough times. I mean, I won't sugarcoat it. It's not been the greatest sector to be in the last couple of years. So, obviously, so you get, how to use the motor. This is important to read when you're a new member, even if you're not a new member, to review it from time to time. I mean, this will keep you out of trouble. And that's my main purpose, is to help you make as much money as safely as possible and balance the risk-to-reward ratio. And this is what professionals do. And I want everyone to feel that they're professional. I want them to feel like they are the best investor in the sector that ever lived. Now, obviously, that's a bold statement. That's what I'm trying to convey here. And people make a big, big mistake when they invest, and that is that they buy the cheapest stock they can find. That's almost a certain way to go broke. The best way to do it is buy the best. When you buy a house, a car, a piece of clothing, or a piece of furniture, you usually buy the best you can get. You should do the same thing with your investor mindset. And time and time again, I see people make those mistakes. So I'm going to spend a little bit more time here on the right-hand side. Here's some of the research reports, Royal Gold Holder, Colossus, on and on. Silver Institute's filed for you. Some of the special reports. Archie's Rule. I'm going to spend a little time here. This report alone is only worth about $30,000. I say that really it's probably worth an infinite amount of money. It's probably priceless. Why? Because this one report will tell you and teach you, if you understand it, if you should ever buy into a company or not. Why? It tells you if a company is going to make money or not. Look, when we mine silver or gold or tin or copper or anything, it's a commodity. And a commodity, you have to rotate that, but this will show you if it's uneconomic or economic. I mean, it's not, if you're getting gold, I don't care if gold comes from Mars, Venus, or, South Africa or Nevada. Gold is gold at the end of the day. So what you want to find out is who's making money. Why would you buy a business that doesn't make money? I mean, really. But people don't seem to get it. Now, this will teach you and show you how to evaluate a mine. If silver's at $8, do you buy this company? If silver's at 15, do you buy this company? So, that's just one of these reports. There's all kinds of them here. This is what I wrote for the next decade. Quite honestly, I need to update this, but this was taking a blank sheet of paper and going and asking the question, is silver still good investing or not? I mean, I don't know who's got this kind of reporting. Peter, you know most of newsletter writers. Who else does this kind of work? Do you know anyone that does?
No, it's it's definitely unique, and I've follow all of them. So.
I mean, even close. I mean, I know most of the Casey guys. I mean, some of them used to work with me, but and I have a staff. I can't do this all by myself anymore. But honestly, bulletproof your shares. One of the questions I get all the time. Well, David, I want to take possession of my shares. How do I do it? This report is a cost report. You have to pay money for it. We got permission from Dakota Silva to give it to our paid members. This will teach you how exactly to take possession of your share certificates, okay? Well, what about taking silver off the exchange? We have a report on that. Taking delivery off the exchange. You want to do it? Got a report for that. I don't know anyone else that does that. This is right here, how to do it. This tells you what to do. It's not very complicated. It's only a 2-page report. Pretty simple. And I give you the name, the direct line to my futures broker that'll talk you through it if you need help. So, I'm not going to belabor it anymore. I just, I'm obviously, I'm just look at all my alert reports. Alert. Now, I'll just show you one of these. Let's just go to, I don't know which one I'm picking. I'll just pick one at random. Okay, so remember that alert window comes up, so you know that I did it. And this will be a sample. I do it with Camtasia. Peter, can you hear the sound or not?
Yeah, yes, it's fine.
Okay.
It is a bit soft, David.
Okay, I'll stop it. Well, thanks for the feedback. So that is what I do. I do those. No one else on the staff does those. I do those. Not to say that in the future someone might. So Anyway, I'm done ranting and raving and showing people what the site looks like. I mean, here's some, and the stuff we do at the shows, for example. Now, I can't film all the shows because promoters won't let me. But, we're going to be putting up all the Silver Summit 2013. That'll take the next couple of months. But, let's say you were pretty big on, let's say, Impact, for example. I mean, this is the interview we did there, and I just showed one with David Smith. So anyway, I am done. I think I gave a pretty good, view. Just a lot of questions I get is, well, so what, Well, so what is, I've made it my life. So what is, I don't know anyone more dedicated in the industry than I am from the newsletter perspective. And I hate to use the word newsletter because I think it's much more than that. I think we do sound research here. But regardless of what you want to name us or call us, it doesn't affect the fact of what we do. And what we do, I think, is far beyond what you're going to get from, like, some of the other names out there that you're well familiar with that are much stronger marketers than I am. So with that said, Peter, can you just start feeding me the questions, and I'll do the best I can, and I might pull up one of the many services I subscribe to help benefit my members.
Sure, absolutely. Okay, we'll go ahead and kick off. Our first question is from Andrew. Andrew's wondering, David, I'm buying physical gold and silver. I want to know if you think the premium paid for government-minted coins is worth it versus privately minted rounds that have much lower premiums.
Great question, and that's what to kick off with. It's your decision. Here's my take on it. One, when I wrote those 10 Rules of Silver Investing, which you probably haven't read, and you can get that for free on the free newsletters I showed you, I said get as much silver as you can for the money. So, for example, a silver round is going to cost less of a premium than a silver eagle from the U.S. Mint, and there's still 1 ounce of fine silver any way you slice it. So similar to what I said about the mines, or the mining companies rather. An ounce of gold is an ounce of gold. The gold doesn't really care where it's coming from. What you care about is who's making the biggest margin and what company's profitable and which one isn't. So it's similar, but the caveat is this. A lot of, let's say, older folks don't trust or don't want to buy silver rounds. They would rather pay the premium and say, it's stamped with, it's a silver maple, it's got a Canadian stamp on it, or it's a silver eagle, it's got a U.S. stamp on it, it's minted by government. And they're willing to do that. The only problem with that is on the sell side, you don't usually capture that premium. Now, in some cases you do, but in most cases you don't. I would say I have them both. I mean, there are some advantages to the Silver Eagle, and to talk to my friend Mike Maloney, and Mike and I have known each other for a very long time. Mike's argument on the Silver Eagles is that, and this is according to Mike, there's no 1099 reporting requirement because it's legal tender. So that doesn't mean you're not supposed to report it. All I'm saying is you're not going to get a 1099. So that's, again, an individual decision. I have advocated get the most silver you can for your money, but if you're uncomfortable with silver round, you want a government stamp, by all means, do that.
Okay, great. Thank you for that. The next question is from Malcolm. He's wondering about what do you make of the large disconnect between the silver exchanges of Shanghai and COMEX? The first is showing record declines, yet the second is showing record inventories. What does this mean for individual investors? And is this a case of transfer from the east to west as opposed to west to east like gold?
It's hard to say. I would argue record inventories. I'm assuming he's meaning from the CME, the COMEX. If you look at what the COMEX inventories are, they, may look to him to be up there, and relative to where they were, they may be up somewhat, but they really aren't as high as they have been historically. So, come on, maybe show up. Oh, it's showed up over here. Let me move this over. So, here's the silver inventories. The combined total is 168 million, which is pretty darn high relative to where it's been the last few years. Granted, if you go back to the 70s, like I can, because of being such a fanatic about honest money and precious metals. But this is eligible. Eligible just means that is bought and paid for, resting in a safe in a bank, one of these banks. It's Brinks, Delaware, HSBC, JP Morgan, Scotia, whatever, okay? So, for example, if you look at just Brinks, registered as dealers inventory, which is 13 million, and eligible is 11 million. That, all of the eligible, which is the lion's share of it, 100 and almost 25 million ounces, cannot be touched. The only way that can be touched is if someone signs the eligible certificate and signatures it and then sends it to their broker and says, I want to sell the silver. So you can really take that out of the equation. What you really want to look at is what's the registered. That's the amount the dealers have on hand to dink around with. And I mean dink, because they do. They hypothecate it, loan it, swap it, lend it, rehypothecate it, and on it goes. That number is higher than it's been, but not significantly. The lowest I've ever seen it is slightly below 35 million. So right now we're only 9 million above that, maybe 10 at the most. So that has gone up. So don't, you know, you got to understand how these things work, and I'm not saying they're deliberately set up to, you know, fool you. So certainly it's right. Is the number here, 68 million? Yeah, it's usually around 120, so it's significantly higher. Why anyone would store their metal in one of these depositories is, I don't know. That's what baffles me, and maybe that's part of his question. Because after the MF Global and then going to the PFG, and both of them having problems and people not necessarily getting all their metal back, that would tell me I want to store my metal somewhere outside of these banks. But nonetheless, obviously a lot of metal has poured into these banks relative to where it's been in the past. So hopefully I answered that question for him.
Okay. Great, thank you. And next question, let's talk about potentially deflation. So Mark is wondering, when the US dollar collapses, the stock market will likely collapse too. Do you foresee mining stocks deflating with the rest of the market, or will mining stocks weather the storm?
A great question. Yeah, the inflation-deflation debate is a really interesting one and pretty difficult from my perspective, because there's really both. And of course, you know, being an Austrian economist for the most part, I'm not supposed to say that. But if you own shares in a mining company, I would say, one, it kind of depends on which mining company it is. In other words, if you own, like what I showed you on the top tier, those are solid producers. Those are billion-dollar companies or higher, and you are an owner of that company. They're not going out of business. You have a real asset. So in the case of a crash, you still own part of that company, and I think in that case there would be a scramble to mining shares, probably beforehand. So let me back up slightly. First of all, we're in definitely a deflationary mode psychology-wise. I mean, you can't find hardly anyone out there that psychologically doesn't say, geez, we're in a deflation. Housing prices are down. You know, the healthcare costs are up, but housing's down. Cars, you know, automobiles are probably flat. Groceries may be higher. Food. Energy's kind of neutral. So you can make an argument that we're definitely in a deflationary mode. Point number one is that we're not in what was called a cost-push inflationary spiral that I saw when I was a kid, meaning in my 20s, where you got a cost of living adjustment. Those days are gone. When people think that inflation is going to bail them out, that's not going to happen this time. We have China in the equation now, and these people are working for a couple dollars a day. So Americans can't compete with those wage rates. But mining shares should do better. Now, I think this time, once the market really takes off again, and in that time frame, I think we're talking third quarter 2015 on out. It could happen earlier because there's too many variables, that we could get in a position where you can't really get gold or silver, especially silver in my view, in size. In other words, yes, you go to a coin dealer and you can buy, you know, silver at a premium, you get a coin, you know, you can get junk bags, you can get bars, you get this, but onesie-twosies. For an Eric Sprott, a Stephen Spicer, and a Nick Beresheff, all come into the market and want to buy 10, 20, 30 million ounces of silver at one time in that time frame, I think, I don't know, I think they're going to have a tough time. So what would happen, or what could happen, is that the people that are late to the party say, uh-oh, you know, they're delaying delivery to XYZ, you know, silver fund. So they're going to go to the next best thing, and that's the mining shares. So I think there'll be an acceleration of mining shares, quite frankly. And remember, gold is the most negatively correlated asset to the stock market. That's gold, not gold shares. But there are times, and I've lived through one bull market, where they do even better. So in other words, the mining shares are also very negatively correlated to the stock market. That's not always the case, but it has happened. I've been there, so I've seen it. So I think that would be the case. But again, I think balance is the key. I've never advocated as much of a bull as I am. I've never said put all your money in gold and silver. Never. I think you should have balance. I've said 10 or 20% is probably enough for most people. There are people, personally I own more than that, but this is my job. This is what I live for. And I'm comfortable with the risk because I've had it for so many years. I can live with it, but most people can't. So balance the amount of metal versus shares, balance your shares, talk to your mid-tier speculations, and get a good slice of the pie, in other words, 10 or 20%, perhaps no more than that is my recommendation, and go on with your life. You know, I mean, I could be wrong. Others of us could be wrong. Maybe things are going to straighten out. Maybe things are going to get better. I truly doubt it. But nonetheless, even if they do go south and you have a position of 10%, you're going to be in a much, much better position than almost everybody else, you know, unless they are investing in this sector. So probably overdid that one, Peter. What's the next one?
So, I have to bring up the topic of Bitcoin. It seems to be quite a topic on the people's minds last week, and we have a question from Cassette. He's wondering, is it possible that Bitcoin will negatively affect the long-term trend bull market in silver and gold?
Wow, that's a great question. I never thought of it, and I'm not one to BS. I don't know. You know, I'm a deep thinker. Sometimes I'm pretty good on my feet, not always. I will make a couple of comments about Bitcoin. One, first of all, I'll say again, I'm pre-market. So if you think Bitcoin is a great thing, then who am I to tell you it isn't? I like some aspects of it. I like the fact that it's pre-market. It's outside the purview of, you know, some authoritarian figure telling you what you can do or not. And I like the fact that it's limited. What I don't like about it is that it's really not tangible. In other words, even though it's limited, which means since it is limited that it will have some intrinsic value because there's only so much of a supply, nonetheless, it really isn't any better in some aspects of the current system. In some aspects it is. One is because of you know, privacy and the fact that there isn't some authority that has deep control of it. I'm staying away from it for now. I know Trace Meyer is a good friend of mine. Trace actually came to me personally and spent a lot of time and they said, you know, you really ought to take mortgage report subscriptions using Bitcoin. I almost pulled the trigger and I got sidetracked and never did it. I'm okay with it. I wouldn't look at it as being that detrimental to the metals. I think most people, and this is my guess, and your view could be different than mine, so it's not a right or wrong issue. But I think that, you know, at the end of the day, when things really get crunchy, you want something that you can hold on to and say, here's an ounce of silver, here's an ounce of gold. Bitcoin, you know, it's also, you know, subject to the electronic transfer system, even though it's private. You still need, you know, electrical power. And I'm not saying the power grid's going down, but, you know, some of the authority figures have. So balance again. I mean, I wouldn't put too much into Bitcoin. Honestly, I wish I would have gotten involved when Trace gave me a personal call and said get involved. But nonetheless, I don't see it as really that big a competitor to the precious metals. I know that I've read a few of those articles. I don't buy into it. That's me. If you have a different view, your view on that's opinion. Your opinion is as valid as mine. So that's my opinion on that.
Yeah. Okay, great. Well, next question. Charles is wondering if you could comment on the investigation of J.P. Morgan and the suspicion that the company was deliberately manipulating the price of silver.
Almost hate to. I mean, you can read, you know, you could type that into Google, J.P. Morgan silver, and come up and read for probably 3 days. I mean, I'll try to be brief. This thing has been going on for a very long time. And Ted Butler really has carried the flag on that, and I'll give Ted all the credit. I'll also make some comments that maybe sound slightly negative. They're not meant to be. It's just, you know, we're all different. I'm different from Ted. Ted's different from me. When Ted first really started harping. He was really harping about the leasing of silver more than anything else. You can go back and check out what I say. I mean, you have to believe a word I say. You can try to verify it all. But that was Ted's big thing. When Ted wrote a letter to Alan Greenspan, who was the Fed chief at the time, and said, hey, you guys are doing this in the leasing market. And honestly, Ted thought, and this to me is rather naive, that if he, blew the whistle and showed, the head of the Fed what the heck was going on in the silver market, that they'd investigate and put an end to it, or at least they'd investigate and something would happen. Well, I have a different worldview than Ted, and Ted's not here to defend himself, so, that's my take. I've talked to Ted many times. And I wouldn't even bother because from my perspective, no authority figure is going to do much of anything about it. And that's why I have never really, gotten behind Ted and carried the flag along with him, because I felt one man, and he has many others, Ed Steer, for example, and many others that have, gone along with him. And that's fine. I think it's important. I think it's important work that he's done. But I have never, ever thought that any good would come from it. I just thought it was basically a waste of time to believe that, some CFTC chairman or somebody this or that would really do it. Back to J.P. Morgan specific, there were 5 lawsuits filed. Of those 5, they consolidated them all into one. I've got letters on my desk that are confidential from one of the main lawyers involved on the plaintiff side. In other words, the people are saying you're manipulating. And it's rather heartbreaking because basically by keeping them anonymous, you're saying this is going to fly. And that's kind of what I said the whole time. It's not that it's not manipulated. I'm not saying that. What I'm saying is that the authority figures are going to say, well, and they never said on this last one there wasn't manipulation. What they said is they didn't find enough of anything to do any prosecution. That's what they said. They never said there's no manipulation. So, it's a twofold case. And obviously I'm a bit emotional about this. One, I think it's very important for people to know it. 2, I think it's also important to realize that perhaps in today's world, very little will come from it, even though we know what's going on. And lastly, the bigger and I think more important is outside of both of those, and it is, will it matter in the long run? The answer is it won't. There has never, ever been in all of history a case of manipulation where it didn't eventually blow up. And people say, well, how can you be so confident, Dave? And the reason is that paper doesn't equal real. It's so simple. There's only so many ounces of fine gold and fine silver on the planet, period. And they're so small. The reason they're called precious is because they're precious. There aren't very much. There's not much of it. But there's so many people that are so brainwashed that they don't understand what money is, how important it is, and what has happened in the past, that they ignore it, especially when the psychology has been broken. The only time you hear the mainstream media is, oh, gold's getting crushed, silver's getting crushed. Oh, look at gold, it's down. And look at what they did to Peter Schiff. I mean, the whole time Peter was right, they were making fun of him. So, and now that it's been in a sideways to down market for 2 years, they really have the psychological hand. A lot of people that were on the fence that might have wanted to buy and were willing to buy at 35 and said, I'm going to watch it along and watch it go to 30. Silver looks pretty good at 30, but I think I'll wait. And they've waited, and it gets to 25 and says, gee, he's a better wait. Well, they look right. In fact, they are right. So it's going to take more people involved in the market. And what's going to trigger that, I really don't know. What I do know, again, is that history's proven again and again that the physical reality does not equal the paper fiction, and that truth is all you really need to focus on, that there will be a day, and when that day comes, you may not be able to get in this market very easily.
That's a great point. Well, we've got a few more questions, and we'll go ahead and conclude after that. If you still have some more time, stay with us, David. Do you have a five, 10 minutes? Okay, great. Well, the next question is from Ed from Florida. He's wondering about your silver investing rule number 9. He's a bit confused on that one. If you could explain that a little more, and if you could share us with that.
I don't have it memorized.
Yeah, there's a 10 rules of silver. Is it when to know and when to sell your silver?
Uh-huh. Oh, I forget what I wrote. I'm looking for the book in my bookcase, but
it's know when to sell your silver. Money flows in cycles. I believe this is It talks about you're suggesting buy physical silver now while it's still undervalued. but you should.
Yeah, well, when to sell, I think, is a basic question. I certainly can answer that. And I don't know what I said in the answer in the rules, but and maybe I'll need to modify it. But the way to value it isn't in paper terms. I mean, there's a book in my bookshelf called The Penniless Billionaires. If you read that book, you'll understand that paper price is absolutely meaningless. It's written by Max Shapiro. You might be able to get it on Amazon. It would probably cost you a fortune. You can read Gross Close, Money and Man. Gross Close is Groseclose. Those would be two to start with. But to the point, what you want to look at is what does an ounce of silver buy, or an ounce of gold. Gold is probably easier to describe because it's more ubiquitous. People are familiar with the gold standard, are familiar with gold, and you hear about gold much more in the mainstream than you ever hear about silver. But the old adage that an ounce of gold will buy a fine men's suit, no matter what era it is, over the long term. And so that's what I would call the fair value of gold. In the Roman times, they'll buy you a toga, sandals, whatever. And in the 19th century, it'd buy you a fine suit, vest, shirt, tie, hat, umbrella, shoes, socks, whatever. So that's the idea. An ounce of gold will buy you that. So if an ounce of gold in 2016 buys you 12 suits, I would suggest it's overvalued. I mean, anyone can understand that. So I don't care what the paper price is, mostly. I mean, sure, I look at it like everyone. But what you really want to look at is what's an ounce of silver buy, what's an ounce of gold buy. And that's how you're going to determine whether or not it's overvalued. So how much of a house can I buy for silver or gold? How much of a car can I buy for an ounce of silver or gold? Is it at its historic value? Is it above it? Is it below it? And that's what I'll be looking for. I'm not going to necessarily use the metrics of the paper price. So I don't know what I said in Rule 9 other than, having been through the market once and not selling enough at the top. I want to help my people as much as I can. Another caveat on this is, don't expect anyone to get out the tippy top or in the very bottom. That's an amateur's game. It's an amateur's mindset. If you can filter out, the way the professionals do it is you accumulate on the coming inside and you distribute on the outside. So in other words, if you're going to take a big position in anything, it's going to move the stock or the commodity. I mean, look at how Warren Buffett did it. He accumulated over months and months and months. The Hunts did the same thing. And when you distribute it, you sell over weeks and months and months. So it's the same thing with you. You should take that same principle and apply it. So even if you have a small position, now if you're talking 10 coins, I mean, this doesn't apply. But, if you've got 10% of your net worth in it or something, you don't want to sell all of it at one time. You want to start looking. I'll give you cues. I'll say, look, to me, silver's overvalued here. And then again, pre-market. Well, David, it's going much higher. Well, maybe it is, maybe it isn't. I mean, I called the top at $48. I got a lot of resistance from a lot of people that are out there in the community that have much more popular names than I do that's telling me I was going to lose my reputation. I was, it's going to 100. I don't know what I'm talking about. Don't do it. I do my own work. I said that was the top. I caught it within 3 days. And it's been the top ever since. And I don't think it's the ultimate top, but certainly if you put on a hedge at 48 and rode it for just the 3 months that I had it on, you'd be pretty happy.
Good point. Okay, we have, before we get to our last question on the silver price, David's wondering, Lou was wondering, can't they QE like Japan has for 20 more years? Should we then have more of a longer-term time frame on when the metals could come back?
Well, the honest answer is yes. I mean, could they? Could is the word. I would answer would they. Mm-hmm. Would the market put up with that nonsense for 20 more years? And my take is no. I mean, and this is based on opinion, but studied opinion. I mean, I've gone through many of the great empires that arise and their falls, and I also know what the average is. A fiat currency's average is about 40 years. We're in 43 or 44 right now. So we're kind of at the end of the limit. I think 2016 on, I think we've got a couple more years. Now, again, that's my very, very studied view. Does it make me right? No, it doesn't. But can they? No, you're already seeing, how do I know that? Well, I know it because of the market. The market is smarter than all of us because it's a combination of everybody's thoughts, attitudes, and opinions, and they vote. They market, but what they think is one of the most important things in the material life, not our spiritual life, and I won't go down that path, and that's money. Money transcends everything. If you're in India, you care about money. If you're in Russia, you care about money. South Africa, it doesn't matter what your skin color is, doesn't matter your age, doesn't matter your religion, doesn't matter your sexual orientation. It doesn't matter. Money transcends everything. So what's going on in the money markets? Well, Russia, China, India, Brazil, they're all saying, the heck with the dollar. I don't want anything to do with it. And the most important of all, in my view, Saudi Arabia, who basically is the kingpin for the petrodollar, has been fed up with the United States of America. And they're looking to exit. They're saying, hey, you know what? We are not happy with what you're doing. We want you to go to war with Syria, and you're not doing it. So so the obvious is right in front of you. These major powers that probably aren't as militarily powerful as the U.S. is, and that could be questioned as well, but I won't go there. And they're exiting. They're getting away. It's the musical chairs. The game of musical chairs is going on, and Russia, China, India, Brazil, perhaps Saudi Arabia is about to sit down. They have their chairs. But the people that have the old name, meaning that are still holding the U.S. dollar, may not be able to find a chair when it stops. So I think we're much closer than 20 years. Could it? Yeah, it could. Will it? I doubt it. And the old adage, I'd rather be 6 months too early than 6 minutes too late, I think applies here. Now, unfortunately, 6 months is probably not good. Maybe 6 years is more appropriate. I don't know. And again, balance. If you have 10 or 20%, and you got in, let's say, 2005, 6, 7, I don't know, and you just held right now, you could have, easily exited, being a member of the market for or whatever, and still, gone about your business. I mean, obviously the stock market's been doing well. I won't argue that. The bond market, I think, is already peaked. And by the way, that's the thing to look at. You really want to look at what the debt markets are doing. We'll never be able to go through what we did in 1980 with Paul Volcker. We'll never be able to raise interest rates up on a short-term basis to 17.5%. It absolutely collapses the system. So they're going to continue this zero interest rate policy. You're going to continue in this kind of Japan mode that he referred to accurately. And things are going to continue to deteriorate. And so you need to, take a deep breath and look at the hard facts, study history, look at those books I mentioned, and determine for yourself. All I can do is guide you, help you, but I strive for balance on my personal life. I want to balance what I do work-wise, health-wise, physically, and, of course, spirituality plays into it. Again, I won't go there, but I want a balanced life. As much as I obsess about honest money, free markets, and that type of thing, it's not all I do every day. I mean, there's other parts of my life. So same thing with you. I mean, investing is very interesting. It's important. And, economically, I think we're all a bit scared. I know I am. I really, looking, Peter, when I was your age, and looking at things back when, that many years ago for me, I never dreamed it would get to where it is today, not so much as the value of the dollar, but the amount of control that these control freaks have put on us. Where they're watching, everything we do, every text we make, every fund transfer, and on and on. I mean, I never thought it would get to this Orwellian state to the level. I mean, I thought the trend was there, but I had no idea that, when I walk through an airport, I'm being scanned, the whole time, Basically, I don't really think about it all the time, but, it's just nuts. But that's the world we live in.
It is changing very quickly. Well, we've had about 30 questions and we can't get through all of them, but there's been a common question about silver prices, so we'll end with that as the last question here. Bob K from Silver Prices is asking, what are the chances of silver prices dropping to $15 an ounce?
Not interesting. That's let me see if I can log into one of my many accounts here. And pull up a silver chart so we can all...
I think of mention is during this call we had FOMC meeting minutes released, which showed potential for a taper in the coming months, so it seems to have knocked down the price in the last hour or so.
Okay. All right. I have silver chart on almost every one of these. Of course, I'll pull up one that doesn't. There's copper. This, by the way, is kind of what I do on the updates for the Basic Plus subscribers. So let me go into this one here, and I'll change the size a little bit, and I'll change it to 3 months. See what comes up here. Okay, that's not enough. Let me go back. Sorry, 5 months updated. Okay, so here we are. This is the last 5 months of silver trading, and this would be something like I do on an update. So if you go back into this one right here, hopefully you can see my cursor. See my cursor right here. I'm coming down on this one right here. This was the key reversal day. See how much higher it closed at than the day before, and see how much lower it went than the day before. That's a key reversal. It's 1817, and I think it was 2005. And from that time, we have not been below, looks like 19 and a half, so I beg your pardon. We have not been below that level, but we're coming down. So can we get to 15? Yes. Will we? I doubt it. Now, I know there's Martin Armstrong and David Ben Simon, who I interviewed for our Mastermind series. David believes that it's going to hit 15 by the end of the year, and gold will hit about 1,000 by the end of the year, and then that's it. That is the bottom. And I don't know what Marty says, if that's the bottom or not. I think he's made a pretty strong case that it's going to about 1,000. I don't know, because I haven't read his article. But I get a lot of input, so I know what he said from a lot of my readers. So will it? Maybe. But, if I was going to annotate it, and again, this is kind of what I do on the Basic Plus service, is I would come in here and I draw a line. I say, look, the first thing that you want to see hold, and I know this because I'm really in the market for 2005. And unfortunately, it broke that yesterday and it's confirming it today. That you could see that level held there, broke through there. It's at a very important level, and it broke it right there. So, so that was the first one, and that's going to the downside. So that's not a good sign. Are we going to get to this level here? That 1817? I don't know. We have what's called congestion in here. Okay, all of that area is people that are fighting back and forth, bulls and bears. So that is from the 2005 level down to about the 1950 level. So about a $1, maybe slightly more than that. So there'll be congestion there. It won't be able to just go banging through that, because there's a lot of people that think that's too cheap, and there's other people who think it could go lower. Does it answer your question? No. I don't think it will. Marty thinks it will. The point I think to make is if it were to go below 1817, which is this level right here, is 15 a lot lower? And the answer is yeah. I mean, in silver it would be. In gold, I had the gold chart up here. Percentage-wise, it wouldn't be as big a move from the already established low that happened about the same time, or maybe the same day, I forget, for gold. But if you already have gutted it out from the end of June, 28th of June, till now, why would you give up for 2 more months? Because almost everybody, to a man, the way I understand it, I could be wrong, the way I understand it is the David Ben Simons, who disagrees with me, thinks it's going lower, the Martin Armstrongs, who thinks it's going lower, and others that think it's going lower, all, to my knowledge, I could be wrong again, think that, that's it. In other words, so why would you hold this whole time? And the only reason, of course, is if you're using leverage. If you're using leverage, use your head. Have a plan and use the plan. But I doubt it. But, I'll live and stand by it. I certainly I would put my record for making calls in this market up against anyone. Does that make me right 100%? No. No. I've been wrong. I called the top at 48. I mean, when it was at 21, I called that top as well. But at the bottom, I called it at 1250 and I actually hit 9. I mean, in real terms, it was about 1350 because the silver market dried up. But that doesn't, that doesn't take away the fact that I missed the bottom on that one. I might miss the bottom of this one. Quite honestly, I'm better calling tops than I am calling bottoms. But nonetheless, it's undervalued. The true price of silver for most mining companies is about $22 an ounce. with the buy side under that and have some patience. I think you're going to do quite well over the next few years. And, you know, if you're concerned about this $15 level, go ahead and be concerned. Me personally, I'm not. Most of my silvers, you know, I have no real leverage positions on right now, none. I have no futures positions on right now. I have, you know, held mining equities that are much lower than where they were at one point in time. So, you know, I'm just willing to ride it out. I think you should too. Obviously, if you have too big a position or you're leveraged, then that may take, you know, further thinking. We'll see. So let me just add one more thing here. I'll draw one more line, and that is basically, and this is an art, not a science, but I'll use about there. I'd say about the 19.5 level. So if you were to break that, and it was big volume is always the key. You always want to see what goes on the volume. So when you get big volume or above average volume, like I just circled there. So if you got a penetration to the 1950 level on big volume and held for 3 days in a row, then you could almost guarantee, I said almost guarantee, that you're going to test 1817. Test doesn't mean it's going through it. And if that were to break, then knowing the silver market like I know it, and excuse the ego, it probably would go to 15 or something, 16, 17, 1701, I don't know. What I do know about silver is once you break those levels, go back to the upside and the downside. In this case, of course, we're talking the downside. I don't think it's going to happen. I would put it at 20% or less. It could probably go. I think 80% it's not going to. But, you know, if it does, be prepared. And if you're on leverage, I mean, what do? Well, I would use this level, the 1950 level, and have a plan. I'd buy puts or whatever, you know, or get out of the position or whatever. I mean, that's an individual call. I can't, you know, trade for you. I don't know what your situation individually is. But if you've already bought it and held it, and you've already written it out here, and we're only looking at probably another month and a half. I mean, we're all the way steady halfway through November, and the holiday season. By the way, I'll just add this, and then I'll stop. The last 2 years, the seasonality for silver and gold has worked really well, and I know it, you know, pretty well because I've been living this market for so long. And normally, you got a really good trade from like the August time frame up to the end of March. And that's like an 85% probability that if you just buy in August and hold it, you're going to make money like 80, 85% of the time. That's a strong probability, but it's not 100%. That didn't hold this year. I tried that on one of my futures trades. We made some money because I followed it up with a stop, but regardless, and 2050 was the level I was in, by the way. It just started boosting the downside. I took profits higher. Once we got up to this 25 level, I told my people I thought this was probably going to be about it for the time, you know, this level in here, and that's basically what I said you should get out. But anyway, it's fallen off badly in the last trading day of December, the last 2 years, and I actually expect that will happen again. Will that be 15 or not? I doubt it, but it could.
Okay. Well, we'll have to see how that plays out. David, I really appreciate you joining us and taking time to answer these questions today. We had quite a few, and I'm sure we'll have to do a follow-up event soon to go through them all. I did post the link to Silver Investor and your YouTube channel in the chat window, so please take a look at those. And as we close this off, this webinar off, I'd like to ask, do a quick poll of the audience, which I'll launch right now. If could just kind of gauge the sentiment of the audience, what is your view of the silver price, if we've reached the bottom or not? So that poll has now just been launched. So as we kind of close out, is there anything else you'd like to share, David? Any other information or?
Yeah, I would like to share one more thing I forgot, and I wrote it down so I wouldn't forget. So when we're talking about the paid membership, because the more you pay, the closer you get to me personally, which means at the Basic Plus level, you can email us your questions. So it's not a consultation service, but you can email me direct, and myself or one of my staff will answer your question. And if they're pertinent as far as the benefit to the entire membership service, then we usually put them in the report monthly. So your question might be, and several of them are, 'cause I think we have one of the best leaderships out there, that it's beneficial to answer that question for everybody's benefit. If not, then we just answer it direct, so you will get an answer. One thing we can't do is ask individual stock questions, even if they're in the portfolio. So, like Silvercrest is in the portfolio, I'm doing this, should I sell my Silvercrest position? I can't answer that. That's individual investment advice, and in the domain that we are in, you can't give individual investment advice. But what we can do, let's say we got a bunch and we have one recently on one of the stocks, we can do it collectively. So I could say, we have an update on XYZ mining, here's what is going on, we've talked to management, blah, 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 blah. And again, some of those might come out on the alert system or whatever. So it's just a benefit of being a paid member that, you can send us emails. And believe me, with an internet business, I get my share of email for you to go, Peter. So thank you for letting me have that final word.
Okay, great. Thank you very much, David, and we look forward to having you back on in the future. All right, everyone, that will conclude our live SilverSeek event today. As far as our poll goes, we have 53% of the attendees voting, and 20% believe that the bottom has been put in silver, and 80% believe the selling is not over yet. So we'll have to see how that plays out in the coming weeks, days, and months. We will be uploading this presentation to our YouTube channel and to silverseek.com, so please take a look at that in the coming day or so, and we'll be following up soon with our next SilverSeek and GoldSeek live events. So thank you everyone for joining today. We look forward to seeing you soon.